Blow, pazi, ovo je malo. Daj si pjeva. Blow, molim te, pazi. Hello everyone, my voice is a little bit weird, I don't know why. Ne, Blow, nemoj, molim te. Anyways, today we're gonna be doing how to take loss and liquidity part 3, I think. Yeah.
11.
Bubo, aj, gdje ćeš? Šta ti je? Bubi, gdje? Šta je bilo? Gdje ćeš? Okay, I guess she'll just chill with us, I guess, for now.
Get started, okay? Today's another discipline video, and since we're slowly starting to merge into like how to take trades, I figured
his voice
we
is
teach
weird,
the most important lesson. Also, I'm sorry, like if my voice is like very messed up right now. I know. I got a super sore throat.
She likes to sit behind my computer and just like
lube it up with
watch.
this water during this video.
I think she gets annoyed when I touch keys and
yeah,
stuff.
so what was I saying? Yeah, this is going to be the most important video, and it's understanding how to take loss. Okay, so once again, per usual, on these discipline videos, we don't do anything on charts. I'm just talking face to face, and my face cam came, but it doesn't work for my computer. It will work for my PC. So I'm sorry. We will, when it gets into discipline videos, it will eventually be just a full screen of my face. But right now, if I make it full screen, it's terrible. So, yeah, today's going to be on how to take a loss. This is very, very important. It teaches you a bunch of things. It teaches you literally discipline. You have to be very disciplined in order to just.
Ne može preko tastature, Milan.
I took a loss today. I lost.
Ne, ti moraš sediš i sve, moraš.
$9,000 today, trading GU. Took this trade, fucking lost it.
Blo, jo, bože, nemoj, molim te.
Revenge trade? Did I try and trade again? Did I over leverage? No, I stuck to my rules. I stuck to how much I wanted to risk, and then, you know, the rest from there, nice and easy, right? So, with that being said,
You guys see her? I'm not sure if you guys can
let's
see.
get right into it, jits. Okay, so
You
what is the most important thing to understand about taking a loss? If you can realize that when you lose, that is a part of the game, that you are going to lose, that you should encourage it because it literally, you know, means you're fucking human.
Yeah.
If you can have that mindset, if you can be almost happy when you see a loss because you know you're going to learn something from it, if you can do that, dude, it will change the game for you by a million, okay?
Ne može, Bubo, već si lagla, znači, ne zebaš.
Dude, this game is all up percentages. You're not going to be 100% from the field. You're not. It's impossible. No profitable trader.
Please, just take a look. What the fuck she's doing?
None of them do.
I'm not sure if you guys can see, it's like... That's interesting.
At least once, okay? It's just part of the game. The market is built to beat you. And the sooner you understand that, the easier it will be for you to grow. Because when you
got him so big.
Losses, and you get upset about it, and you throw a fit, that's literally the opposite of what you should be doing. That's letting your emotions take over. That's showing that you're, you know, emotionally unstable about the money that's in your trading.
Jebem ti mamu!
In the first place, that probably means you over-risked. That probably means it was your fifth trade that day. Right? Come on, guys. Let's be level-headed. Okay, level-headed in these markets. So the first thing you need to understand, yeah, after this bootcamp, once you learn how to execute, once you learn how to take a trade, if you lose your first trade, be happy, okay? The person that fails 100 times will have way more knowledge and way more skill than the person who never fails. So that makes sense. You learn from failing. You learn from your mistakes. So encourage it. You're in your learning phase. You're going to be trading on demo anyways. You're not even going to be trading with real money. Encourage losing. Obviously, when you get to the point where you're trading with lots of money, yeah, you probably wouldn't want to lose.
She got me real bad, man. What the fuck? You guys see that?
But at this level, right here, for me,
Jebać ti mamu, bre, alo.
For me,
Šta me ti grebaš?
for me, like, I love when I take a loss because I can learn from it. I get to study the market after my loss. Say, okay, well, why did it move the way that it moved? Okay, why did it go against me? And right, I'm not going to look back and think, why did I take this trade? I want to understand why didn't it go in my direction. Okay, it's not, oh, I shouldn't have taken it for this, this, or this, right? Because it's all probability.
You're supposed to chill behind
me tomorrow on a very similar pair, something like all the same confluences, and still win. That's the crazy part about this stuff, guys. This market is so hard to master because it's got like mixed personalities. One day you can, like no setup is going. Every setup is like one of one, right? Different market conditions every single day, different prices, different things that it's going to react off of. It's constantly learning, constantly reacting, right? It's an algorithm. Okay, so with that knowledge, right, you should encourage a loss, learn from it, okay, and understand that
she decided she doesn't want
never
to
be
chill with
100%
us
from the field in this.
She's under my chair now.
You miss 100% of the shots you don't
She
take.
just sits under my chair and
Don't
just
fucking
hangs
take too
out
many
with me.
shots, right? Don't take too many trades, okay? But you get what I'm saying, right?
She's cute. What is this?
You're going to win some and you're going to lose some, and at the beginning you're going to lose a lot, but that's what teaches you. That's what helps you learn. The only way that I was able to learn risk management was when I flipped 10K into 112K and then lost it all the next day. That was the catalyst to cause me to learn risk management because I lost so much money in one day. Okay? Encourage losing. Failure makes you grow, makes you better, okay? And if you have learned anything from this whole boot camp, that's all we're trying to do. We're trying to make you better people too. Okay? This isn't just about trading. Alright? This is literally to like fucking pull yourself up by the boots, bro. Like, come on, let's be respectable young men. All right, yes, I can, mess around every now and then. I can have my fun, but let's focus up. All right, guys, we're trying to improve, and like even in life, bro. Like, if you guys can understand how to take a loss,
what day
bro,
is
like,
it?
okay, we're in Puerto Rico. My friends were here this past week.
I
was
write
out,
down,
having a good time in downtown. Okay, I attempted to talk to like 30 different girls.
25th. Oh fuck! I gotta pay. I gotta pay for my servers. I'll do that after I record.
Right, talking to every single one. Right, if I lost, it's like perfect. On to the next. I was like, who cares? Right? She's gonna forget who I am. She won't remember me because she said no. Right? She said no, so she's not gonna remember me. But the girls that say yes, they remember me. It's a win-win. She says no, perfect. You were gonna waste your time trying to get her anyways. So she just helped you out. Understand that losing can benefit you in so many ways, bro. Sorry, boogies, bugging out. So now let's get into just how to take a loss. So now that you have that mindset, it should be pretty fucking easy to take the loss, right? I mean, there's not much you got to do after that. If you can encourage and accept a loss, and you can say, "Damn, it kind of sucks that I lost money, but hey, what can I learn from this? How can I, make this an actual learning opportunity for me? How can I use this to my advantage? Encourage it. It's going to help you learn. Okay, so what do we do after that? When we take a loss and we say, okay, good. How can I learn from this? Perfect, right? Learn from it. Okay, figure out what you did wrong. Okay, do not get upset about it. The minute you start getting upset, the minute you start getting frustrated about losing, means you are doing something wrong. You have to tell yourself in that moment, I am doing something wrong. You literally are. You're doing something wrong right there. By throwing a fit, by throwing a temper tantrum, you are doing something wrong. Back when I used to do live trading videos, you'd see me say, stopped out. Sometimes I would, throw a fucking party for when take profits get hit, but that's like I'm just putting it on a show for the YouTube video. But now when I'm trading with the Discord, we hit take profit and I'm like, cool, TP one hit. On to the next. It's emotionless in this. And the second you start, oh my god, what the bro, because I've been there, I was a rage monster at this. Sorry. I was a rage monster at this shit. Like I would lose and I would get so mad I would literally scream into a pillow because I was so upset because I wanted to win this so bad, but I was doing it the wrong way. I was doing it by trying to get rich quick. Okay, and the sooner you understand that these early phases you are going to lose money and you can spend time losing money on demo and you don't need to jump right in.
Her idea of playing is to jump on my head and scratch the shit out of me. Like we're rough and everything, but like still.
Quick because that shit will come in due time. Okay? Okay, so all that shit will happen. All that shit will come in due time. Okay? It just takes time, right? You gotta understand, okay, why wouldn't I want to lose money on a demo paper trading account? And then once you learn the skill, right, it's like if you can trade profitably on demo, it's a step up with a live account because then you start thinking about the money. That's when it's like, dude, when you lose, you're actually losing money. But if you can go from being profitable on demo, it'll be like a 1 month turnaround. Literally just understand the skill. I encourage you guys to be on demo, practicing, okay, taking losses, encouraging them, figuring out how you can do better, why you lost. And it's not, oh, why can't I do this? It's how can I learn from this, not why can't I. By saying can't it should not be in your vocabulary, bro. It should not. Okay? It's only I will, I am, okay? It's not I can't. I will learn this, okay? Understand that by trading on demo and losing on there, instead of losing your own money, you will save yourself a lot of money and save yourself a lot of just emotional trauma that these markets cause in people, myself included, Okay? And from there, once you understand the skill and you understand what you're supposed to do, boom, now you can go into a live account. You'll probably lose for like a week or so because you're feeling emotional, but you're going to slap yourself in the face and you're going to say, okay, I actually know what the fuck I'm doing. Let me just go look back at that demo account, right? I'm profitable. I know what I'm doing. I'm fucking profitable. So now let me trade with my live account. I know what I'm doing. I'm not going to do anything different, right? Follow that trading plan. We'll talk about how to build a trading plan in this boot camp. Okay? So literally step by step, be robotic with this shit. Okay? You are the algo. You're the EA. You're the trading bot. Treat yourself like that. Okay? So, right? There's really not much else for you to do. Like understanding how to take a loss. I don't know. Like that's pretty much it. You just literally have to understand. Okay, I can learn from this. Good. Let's encourage it. Okay. When I do lose, I'm willing to learn. Okay. And when I lose, I don't revenge trade. I don't overtrade. I don't react. When I lose, I don't react. There should be no reaction besides happiness. There should only be a positive reaction from losing. Right? How do you think if anybody else lost, like who else lost 10K, who else is able to lose 10K and still be smiling, talking about how they had a good day last night and this whole week, right? Most people would be sick. Most people would be sick. I lost that shit this morning. I lost that shit like literally an hour ago, bro. And I'm still living my best life and I'm having a great time because I know, hey, this money's going to come right back. I know I have the skill to make all that money back and I know I can trade tomorrow, right? There's always another day. There's always another setup. These markets aren't going anywhere. Wow.
Underwear.
These markets aren't going anywhere. Okay? And when you learn that the markets aren't going anywhere and there's going to be another trade tomorrow, you start to realize why you want to take days off for news. And that's a whole other thing that we'll get into, right? You'll start to understand why you're going to want to take days off if you've been up late. You're going to start to understand why you would rather take days off when you're least probable to actually win a trade that day. Whether it's from news, whether it's from you breaking up with your girlfriend and it's actually like emotionally bad, and if you lose that day, you'll probably like actually react to it, right? It's understanding all those things. And that'll come in time and you'll start to feel yourself out with that. But you just have to understand, be in that open mindset of like, yes, it will happen, right? Yes, that will happen to you. Okay, you will get upset. Okay, without a doubt.
Bro, jebać ti mamu, ne možeš da mi grizeš kabel od kalo, bre.
That's the hard part. Being able to
Beži,
be
bre,
like, okay,
jebem ti.
like, okay, this was me overreacting. I'm doing something that I shouldn't
Ne,
be doing.
alo, bačko.
Okay? And then proceeding the correct
Odgrišću
way,
ti
right? Make that
glavu,
reaction
skloni
very
mi od
minimal.
kabla.
Okay, make that reaction not last very long and be conscious of it. And you'll be well on your way with this. Because if you can understand that, you can understand how to take a loss.
Jebem mamu.
It's pretty damn easy from there. It's pretty fucking easy from there. You
Wow.
really, at that point, you really just gotta...
Koga ti grebeš, bre? Sad ću ti jebati mamu, dođi mamu. Dođi mamu. Tako sam i mislio, bre. Mamu ti jebem. Jutros ti pravim da jedeš, sad me grizeš.
Learn your strategy and just take time in the market and understand how it moves. Because if you can nip that shit in the butt, what's holding you back from winning literally infinite amounts of money? If you know your strategy,
This is a little bit of a mess, but
and you understand that this is all just based off of probability.
this is the setup right now.
And you're playing a percentage game on the year term. This is literally just a percent gain over a year, bro. Stop thinking from the day to day. Stop thinking from the week to week. Stop thinking from the month to month. What's coming home in the year, right? And that's all that matters, right? What am I bringing in every single year? What percentage gain am I getting? And if you can get that, then shit, you're doing real good in life. Because at that point, then you just have capital. That's the only issue you have left. You know how to trade the markets. You're unfazed. What's left to stop you from making infinite amounts of money? The money that you have in your account. So that's when you just got to start growing it and scaling it. So that being said, hopefully, I just encourage you guys to be happy about losses. Hopefully this helped you guys switch your mindset about them. It's not place blame. It's not, like the market took me out. No, the market was going to do what it wanted to do. That was where the market was going to go. It's not the market's fault. It's your fault. So once you understand that it's your fault and you did something wrong, you have to learn from it. How can I get better? It's not, I got stopped out because of news. It's not that. Right? It's not, I got stopped out by news. It's, I
This is the most annoying part of having a cat. She needs to break every blue. Sad, jebać ti. Aj silati, beži dole. Beži dole, Blue, imam okačeno na zidu 1.000.001 stvar. Sila se dole. I'm actually gonna rage. Man, get off my PC, bro. Blue!
I tebi, mamu, ti jebem. Dobre. Kome ti šištiš, bre? Beži, bre, van s ove. Beži.
Mrš. Did you hear that? She's hissing at me. Jebem ti mamu, ja bre, bro. Na koga si ti, bro, našla da šištiš? Beži napolje, šta sad hoćeš? Jebem ti mamu, šta sad hoćeš? Ne može, beži napolje. Hoćeš sad, beži napolje.
News might have stopped you out, but hey, market moved, and you got stopped out. Learn from it. Oh, maybe I shouldn't trade before news. Learning opportunities, guys. Okay, so that being said, I'll catch you guys tomorrow, where we will wrap up our liquidity series. All right, peace.
Okay, I have to lock in and listen to this. Let me go get some water. Be back in a second. I'm back, okay. I locked my cat out, so now I can actually like work in peace. I feel bad, but I am... Oh my god, I have work that needs to be done.
Boot camp, who knows?
Whoa, what the fuck?
All I know is we are talking about wrapping up our liquidity little lesson, little series within this boot camp. So after what we have learned, also guys, look, pretty little microphone. I'm spending money on you guys. I didn't need this. I was fine with my trash ass setup, but guess what? I was getting shit on when all you guys were saying your face cam is ass, your setup is ass. Dude, come on, bro. I used to just trade on my phone. You guys are trying to make me up my shit. But anyways, today is part 3 of our liquidity series, and then we will move from there over to our fair value gap series, and then over to our order block series, and then over to our equilibrium series. So we're starting to add the building blocks that we need to actually place trades, and that's going to be part of what we're doing today. Pretty much just talking about the full overview of liquidity, seeing how we can like use it to our advantage, really, because now, right after the first day, we understand what it is and why we want to use it. Right after the second day, we can see directly how it works on the charts, right? We can see, okay, a high gets taken out, and then what happens, right? You can see orders get filled through break of structure, through market structure shift, whatever you want to say, and then price changes direction. So that's more of what now, right after the first day, we understand what it is and why we want to use it. Right after the second day, we can see directly how it works on the charts, right? We can see, okay, a high gets taken out, and then what happens, right? You can see orders get filled through break of structure, through market structure shift, whatever you want to say, and then price changes direction. So that's more of what we're going to be doing today, literally just spotting it out on the chart, helping you guys be able to spot it easier, and then translate that into how you could potentially take a trade off of it. Again, I don't want you guys to think this is a strategy. It's not. It's a piece that we can plug in to a strategy, okay? This is not end-all be-all, okay? So, I mean, literally just starting off, I don't know if you guys can see this, but pretty fucking obvious. We see boom, leg down, break of structure up, closing all the way up here, price rallies, okay? It's very, very easy to see this on the chart. It's when in action, can you actually see it and can you react and actually take the trade correctly off of it? And that's what we're going to be, trying to help you guys do. Let's get rid of my trade from this morning. Shrink. Get rid of this trade that I didn't take. Get rid of anything on here. Cool. All right, so, oops. All right, so to start off, we will cover liquidity on the S&P 500, just because it's pretty easy to spot on high time frames, and it's really relatively easy to show how you could potentially take a trade off of this and how it works. Okay, so first of all, right, why do we want to use liquidity, right? Just a little recap, because that is where the market makers are able to fill their orders, right? Because there's a bunch of people exiting the market and there's a bunch of people entering the market, okay? Perfect. There's a lot of money getting transacted through the market versus when liquidity isn't getting swept or getting, induced, then, it's kind of chippy choppy, okay? Ticky tacky, okay? They aren't able to completely, change direction of the market. All right, so what we're looking for, right, is highs and lows within the market, right? Because that's where people are going to be entering long, and that's where people are going to be entering short, and then that's also where people are going to be getting stopped out, right? So with that being said, right, we are technically looking to label highs and lows as liquidity, right? And most importantly, prominent highs and lows, okay? So you're probably saying, well, how do we know what's prominent? Well, it varies from time frame to time frame on what is prominent or not, but if you just look at the chart, okay, it's relatively easy to just mark out what highs are prominent and what lows are prominent. This is getting kind of messy. I'm just going to work with what we put on right now. So, as we can see, prominent high right here. Why? Because it's the start of this big trend, okay? We come down, we come up and make a double top, pretty prominent high. We come down, make a lower low, okay? Then we come up and take out this prominent high, making a new prominent high, and then what does market do? Rally even lower, okay? Boom, we can get rid of these lows, okay? Then what does price do? We make a relatively prominent low right here, and then a relatively prominent high right here. You could argue that these are prominent highs, but, whatever. Relative prominent high right here, relative prominent low right here. Obviously, we push lower because this is a downtrend. Okay, what does price do? Come up, takes out this high, right? What happens? Break structure to the downside, price falls. Now we have this as a prominent high and this as a prominent low. Okay, price comes down, makes a lower low. Okay, I would also consider this a prominent high because it broke structure on the daily time frame. Okay, what happens? Price rallies up, takes out the prominent high, comes down a little bit. Okay, now we push past that. Where is price likely going to draw towards? This high, right? We can think of liquidity essentially as a magnet for price. That is where price is drawing to because that is where the market makers want to push price so they can get their orders filled. Make sense? Cool, right? So any form of liquidity, right, consider it a magnet for price, right? We're not considering it, oh, buy, oh, sell. We're saying, okay, this is an area where orders could get filled for us to potentially take a trade. It doesn't mean when this high gets hit, we press sell. It doesn't mean when these lows get hit, it press buy, right? Because if you did that, you'd lose way more than you win, right? We wait for these areas of liquidity to get hit, and then we wait for confirmation through break of structure, through other confluences, right? That we'll talk about later in this. Okay, we wait for those confluences to give us the confirmation that liquidity has been swept and that orders have been filled. That makes sense, right? So when we see a liquidity sweep, when we see these prominent highs and lows get taken out, it's safe to assume, okay, I'm now going to wait for confirmation that orders have been filled because then price is going to go in the opposite direction. That makes sense? Cool. Okay, and that's all liquidity is. So how can we use this to our advantage for entries?
Really?
Well, I just talked about it, right? We wait for those prices to get hit, and then we see what price reacts off of it. If price doesn't react, perfect, no trade. If price does react, perfect, act on it, take a trade, right? And then, on the contrary, how can we use liquidity for take profits, right? If it's a magnet for price above, right? If we think, okay, yeah, highs will attract price because that's what it wants to seek out in order to go lower. If we're saying, oh yeah, this is a relative bear market right now, right? If we're saying, oh yeah, this is a relatively bear market, I think price will go lower, right? Then we're waiting for highs to get taken out. But then, right, let's say we do find a trade. Let's say we're able to find an entry, whatever, here. Where are we going to target, right? If we think price is going to go lower, if liquidity is a magnet, then it's probably going to start seeking out these lows. Why? Because just like how market makers need you guys to be entering and exiting for them to enter orders, it's the same thing with exiting, right? Because if they exit at a random point in the chart, right, without a low or a high being like an area where they take orders out, right? If they were to just, exit right now, right? Price would probably drop, price would move in the other direction. They still need people entering and exiting the market just like they do to fill their orders, to sell their orders, right? To exit their orders, to exit their position, right? Without price just making a big move after those positions get closed out. Does that make sense? Because same thing with them wanting to go short at the highs, they also want to, close it, right? If they're going short, they're going to be closing their position at lows. Why? Because there's going to be people going short. There's also people going to be exiting. Lo siento. Sorry. Wow. Been here for too long already. I'm sorry for the language shift. I was just talking to this lady on the phone in Spanish, so my Spanish is not nearly as good as what it used to be, but it gets me around here. So does that make sense, right? So if we're looking for shorts, we're using liquidity to be the peak of our interest, right? We take out a high, we get a break of structure to the downside, perfect. And then like any other confluence, perfect. We can go short, okay? And then where are we targeting? The lows, right? Because that's where they can exit their position. Just like how they were able to fill their position at the high, they have to exit their position at the lows. Make sense? Cool. Okay, so let's just go through more examples of this just working. And we can even go over the examples right here that we already marked out, right? So we had a prominent high right here. As we can see, price pushes up. Where do we get the break of structure? If you guys remember that portion, boom, we get a break of structure right here. This was the most recent low. We get a closure below. Perfect. You can either enter off that, enter off of, you know, some sort of fair value gap on the 4 hour within these candles, right? We see that get filled, chop, break down. Okay, whatever you want, right? We get a liquidity sweep, then a break of structure. Those are pretty standard, okay? Then, where do we target? Next previous prominent lows. Price draws to it just like a fucking magnet. Moving forward, okay? Where is our next previous prominent lows that get made prior to the break of structure to the upside on the daily? Right here. Where's the prominent high that gets made on the daily? Right here. Okay, we see price move up past it. Went pretty far past it. But then we get a break of structure after another form of liquidity gets swept, right? We have highs right here, right? We push past this one, don't get much of a reaction. We push past, take out this one, we do get a reaction. Break of structure to the downside, you know, whether you find an imbalance within here, this daily candle filled this for value gap within here, whatever you want. Okay, it filled orders, okay, we see the confirmation of it with the break of structure. Where does price go to? Where does it get magnetized to?
Is she making a fucking movie? Are we serious? Oh.
To previous prominent. I want you guys to picture this. You guys place a
He has a new one. It's not called bootcamp. It's like Path to Profitability, and it's like updated or whatever. So I might actually start watching that one instead of this bootcamp. I mean, there's bootcamp 1, bootcamp 2.0. Bootcamp 2.0 is like much shorter, but like I think I can just watch all of them, can't I? Yeah, this one's kind of long. This has a lot of videos too.
Alright guys, welcome to our very last episode of Path to Profitability, where we put everything together.
But as I said, yeah, I think I'll just be finishing up with bootcamp. I mean, it's not like it's got 1 million episodes. It's got quite a bit, but not like 1 billion. Yeah, give me a sec though. It's like 100 degrees. I'm not sure why it's so hot in my room. Like it's, I'm dying. Let me go get some water.
Now we have previous prominent lows right here. Trade, you guys have your daily bias fully planned out, okay? You place your trade, you think it's going to go in your direction because your daily bias is just so freaking perfect, right? And then boom, the trade starts going in your direction, and then bow, your trade gets stopped out, and then immediately reverses and hits every single take profit. I know that this has happened to the majority of you guys, and guess what? It happened to me all the freaking time back when I was an unprofitable trader, and you guys are probably trying to figure out, hey, what the freak went wrong? My daily bias was completely correct, but what happened with my execution? And that's what I want to talk to you guys about in this video today.
This is too advanced for me, if I'm gonna be honest. Like, I mean, I get it, but like, how many videos? This has 50 videos. 75.
Previous prominent low. Here. Oh, watch it. Hey. Lens filling this and back. Highs right here. Barely gets wicked. What is good, guys? Welcome back. Welcome to bootcamp, I believe, day 13. Hopefully you guys are ready to get into some discipline stuff. And for most of you guys, today is going to be relatively easy. For others, you know, you might be able to learn a little bit more from it. Today we are going to talk about something very basic, which is just risk management, and really the first part about risk management in just trading, and that is literally how much you are risking. Because when people say risk management is the most important thing, you know, like it's true, but also like it's the most important thing because of how hard it is due to all the other emotions. So in this video, we're going to talk about what risk management really is, which is literally just how much to risk and when to risk it, and all those other emotions and things that we have to deal with. That comes through discipline. So when people say, yeah, risk management is the most important thing, it's not wrong, but it's is this thing on? Yeah, it's not wrong, but it's also, I guess, just not phrased the right way. I would say discipline is the most important thing, and just having a stable and strong like headspace is the most important thing. And not many people have that. You know, believe it or not, in this world, and you tend to find that, you know, you find someone that's super disciplined, they're making a lot of money. Same thing applies to trading. If you're super disciplined, that money will come, just like with any other job, right? If you put in the work, the money will come right back to you. You know, you just got to do the right stuff and don't slip up, okay? So today, it's going to be a relatively quick video, but it is very important if you don't know anything about it. And like I said, all over TikTok, and like I said at the beginning, we are doing this from scratch, so this is essential for me to mention, especially because I feel like a lot of you guys come into this thinking you are going to make 100K in your first year. I hate to ruin your dreams. I hate to break it to you, bro. You're not going to make shit. You're going to lose money probably in your first year. Probably in your second year. Imagine this is like college tuition. You're paying for the lessons. Okay? So how can we make it so we lose the least amount of money? Because it's kind of impossible to just start off offering, even if you've been trading on demo, even if you go from demo, profitable on demo, to live, there is going to be an in-between where you are losing money. Just because your emotions, it's so hard, and that's why half of this literal bootcamp is all dedicated to emotions. So hopefully we can start nipping those things in the ass and, you know, like cut out a lot of these problems that you'll face along the way, as long as you guys listen, as long as you listen. Okay, so today, what are we talking about? We're talking about risk management, how much you should risk per trade, and that's about it, and how often you should trade, because that's really all risk management is, right? What are we doing? Managing our risk. How do we do that? Understand what we're risking and understand not to overdo it, okay? So how can we do that? What I like to do, very simple, okay? Risk 1 to 3% of your account. And that's it, okay? You're risking 1 to 3% of your account size per trade, okay? And depending on if you do futures, if you do options, if you do Forex, there's a bunch of different ways to calculate this and figure out your risk, and it's relatively easy on all of them. And a little simple Google search can help you out. How do I risk 1% of my account doing options with this stop loss? How do I risk 1 to 3% of my account doing futures with, you know, a 2-point stop loss, with a 5-point stop loss, with a 10-point stop loss, right? How do I calculate, you know, how do I figure out 1% risk, loss size calculator, position size calculator, all of those things work. That's not for me to do, that's for you to do, that's your homework. There you go, that's one step of your homework. Okay, you can figure out where you can find out to calculate that. That's not what I'm here for. Google can do that in 2 seconds, and I'm not going to waste my time explaining that. So, that being said, you're going to risk 1 to 3% of your account. Why are we doing this? Well, let's think about it logically, right? If we are risking 1% of our account per trade, that means we would have to lose 100 trades in a row to lose that account completely. Will that happen? Rarely, right? You may be asset trading, but you will probably get at least like 2 out of your 10 trades to hit take profit, whether it's from luck or just, yeah, it'll probably be from luck if you're terrible at trading, right? So, right, it's pretty much impossible to blow your account risking 1% per trade, because that pretty much means you would have to lose 100 trades in a row, and you aren't going to do that. And then from there, it's like, okay, let's say like even then, like let's say you're losing 80% of the time. If you're only risking 1%, then like, you know, at the end of the year, you'll still have 20% of that account left, and that's still money that you saved, right? Instead of blowing all of it in 2 weeks and then having to refund it, right? So let's think about this logically. Would you rather be able to keep the initial account that you started with, or would you rather keep having to fund that same amount of money that's in your account right now every fucking week because you keep losing it? All because you want to get rich quick, and we know damn well you aren't, right? We talked about this at the very beginning. You will not get rich quick doing this. Get that fucking out of your head. Okay, get it out of your head. And once that's gone, say, okay, cool. I'll get rich slow. Relatively slow, right? So I'll get rich slow. How do you do that? By risking 1 to 3% of your account. Okay, what else does this mean? This also means, okay, yeah, we're risking 1% per trade. That means it takes 100 trades for us, you know, to lose everything. However, what happens if you take 100 trades in a day? That means that account will be gone in a day. And we can't risk that. We can't. This is a risk-on marketplace. This is a risk-on asset. This is a risk-on job, okay? If you are the type of person that needs instant gratification and you need it every second of the day, this is not for you. Because with trading, trading is not what people paint it out to be. Trading is waking up and doing something without emotion, and you have to be able to make up to upwards of 60K in a day and be emotionless, and also lose, you know, up to like 20. I lost like 27K like 2 weeks ago in one trade in a day. And you have to be emotionless, because the second your emotions plug in, boom, you're fucked. That account, consider that gone. Literally consider it gone. The second you start overtrading, the second you start taking more than the set amount of trades that you wanted to take per day, the minute you start doing more than that, that's when you're screwed. The minute you start risking more, that's when you're screwed. And you're probably thinking, no, that's not going to be me. It's not going to be me. I'm going to follow TJR. Trust me, you will make this mistake without a doubt. But again, remember what we said last time, last discipline class. Understand when the mistake happens and never do it again. Right? It's like, imagine you have the best job in the world, and you have a boss, and you're getting paid millions of dollars a year, and you fuck up, you make a mistake, and your boss comes to you and says, I can fire you right now, or I'll give you one more chance, but you can never make this mistake again. Right? Never make that mistake again. Because this is literally the exact same situation. Because you're literally on pace to pretty much an infinite source of money with this skill, as long as you follow these damn rules. Because think about it this way. If you had $200,000 in your trading account, would you be trading the way that you are now? Would you be risking 20 to 30% per trade? Would you be risking your entire account on a trade? Would you be taking 10 trades a day? And would you be okay with losing 10 trades every single day with that high of a risk? You probably wouldn't, especially if it was $200,000. And you're probably saying, TJR, my account's not at that size right now. I know it's not at that size. But you have to treat it as if it is at that size, because that's just like, you know, some bitch-ass kid in high school or in college saying, I don't got to do this, I don't got to do that, I'm not in the NBA yet. Well, how the fuck do you think you're going to get into the NBA? How the fuck do you expect yourself to get to that point if you can't even act and hold yourself like the people that are already doing that are, you know? How do you expect to get there? You really think you're going to do it a different way? You really think of all these people that are doing this successfully, you really think that you can do it a different way? Right? Let's think about this. Okay? So, now that we understand all that, perfect. Fucking stick to it. That's what risk management is. Clap it up. You figured it out. You're done. Now you just gotta stick to it. And that's the hard part. So, super fucking easy video today. Write down in your notes. Risk management. What am I risking? 1 to 3% per trade. How many trades am I taking per day? This is what I would like to say. Risk 1 to 3% of your account per day. That just makes it easy. That makes it the easiest thing possible. Because then it's like, okay, I can take 2 trades with 1.5% risk. Or I can take 1 trade with 1% risk. I can take 1 trade with 3% risk. I can take 3 trades with 1% risk. Either way, you're still within that threshold. And you can take, 1 or 2 setups, right? If you see 2 setups for the day, perfect. And guys, the nice thing is, you're not always going to see multiple setups every day. Who knows? Some days you might not see any setups and you risk 0 on the day. Other times you see 2 setups and you want to, go heavier on the risk because all the biases are aligning, right? And that we'll cover that in this course as well. But for risk management, 1 to 3% a day, because all you're doing here is living to trade another day. If you can live to trade another day, there will always be setups tomorrow. This market is not going anywhere. This market's not going anywhere, so stop trying to rush the process. You guys realize you were trying to go from 0 to 100K in under a month. Do you realize how fucking stupid that sounds? You are, okay, that's you. That's you. It is you. Okay, that is you. If you think that is possible, if you are a child. I can't wait to watch TJR's video today. I can't wait to become a millionaire in 2 days. That's you. If you're watching this, saying, yeah, I'm trying to be a $1 million trader at the end of this year. Come on, guys. Let's be ambitious. Let's be slightly over ambitious. Let's not, and I didn't even want this bitch ass gun. I was just trying to be like you. Let's be slightly overly ambitious. Let's not be fucking liars. Okay? I don't want this shit. Okay, let's be smart about this. All right, and understand that this will take time. Okay, the money's not going to happen in one day. But again, think about what we've said previously. We are here to learn the skill initially. The money will come, and that is very, very difficult for traders to understand, especially new traders or traders, people learning how to trade. They want money first, and that's it. They don't even think about the skill. They're just like, me want money. Give it. Okay. Dipshit. You won't get it. Okay. You're not going to get that money because you can give a fuck about learning the skill. All you want is the fucking money. Why don't you instead of dedicating your life to I want to make money, dedicate the shit to I want to actually learn how the fuck these charts move, because once you understand that, money is fucking limitless. If you know where a chart is going to go, that literally is literally showing you where the economy is going in terms of like the S&P 500 or literally the DXY. If you can read that chart, you have insider information. And that in itself is an infinite money glitch. And that's what you have to understand. It's the skill that's the glitch. I don't know what you think. I don't know what you think, your bullshit ass over leveraged fucking trades are gonna do. They won't do shit. You're banking, you're over leveraging and over trading, banking and hoping that you can get one trade to hit, one trade to get you out of the fat ass hole that you've been in. Newsflash, buddy, you're digging it fucking deeper with every single one of those that you take. Because guess what? I was there.
1 second.
And I went to, bro, I was in so much fucking debt. I was in so much debt because of that shit. It was terrible. I was literally indebted to friends. And that is never a fun thing. And shout out those people for not literally, like, beating my ass over the money, because it took me a while to get it back to them. So, yeah, don't fall into the stupid-ass trap of thinking you're going to get rich quick and risking a lot. This is a risk-on game, and there's no point in putting risk on when you don't even know how to do this. So this is very important that we're getting this out of the way early on, because... shit, man, you guys would have been fucked. You guys would have been like, perfect, I know how to trade. Let's put 1,000 on this shit. And it's like, all right, I failed you, right? So before we even teach you guys when to enter a trade, let's understand what we're entering with and why we want to do so, okay? So hopefully you guys understood that from the video. And we have a nice little dildo here for me to speak into now. So maybe the audio's clear, maybe. And is the video clear? I didn't do a face cam, but I tried, like, different settings. I don't know. Hopefully it worked out. If not... I'm sorry. But anyways, I'll see you guys tomorrow. Peace out. I want to eat your ass and lick your ballsack. Alright, this is the 10th.
Oh my days. I gotta go do some work for my server, and new season's coming soon. Damn, that's a pain. Got a lot of work that I need to do.
I made $1,800 in the first week of...
Hey. Páno nebáš iskra. To ne. Damn. Anyways, I have this like pretty fucking huge ass to-do list. I'll show you guys on this. Look at this, I have to do all of this, like, okay. I've got like a week to do all of that, that's gonna be crazy. Anyways, yeah, that's it for this video. Hope streaming tomorrow, and since it's gonna be Thursday, we're probably gonna be doing farewell yaps and identifying problems. And yeah, I'll see you guys tomorrow. Peace.